Everything you've been told about used boat values is a lie being told by people who need your commission. While brokers are telling you it's a buyer's market and pointing to price reductions as proof, insurance underwriters are quietly redlining entire portions of the fleet. They're not negotiating or explaining. They're simply removing boats from eligibility year by year, zip code by zip code. What we're witnessing right now is the first digital repo in history. No tow truck, no bank letter, and no public record. Just a policy that doesn't renew. And overnight, your boat stops being an asset and becomes a liability you can't finance, can't insure, and eventually can't sell. If you don't understand the adjout rule that's hitting in the next 45 days, you're already behind the curve. Later in this video, I'm going to show you the 3-word phrase buried in your policy that gives insurers the legal right to walk away the moment a storm gets a name, even if your boat never leaves the slip. The reason most owners don't see this coming is because nothing looks broken. The gel coat still shines, and the engines still fire. The survey still passes. But this market isn't collapsing from the outside. It's being hollowed out from underneath. This is not a pricing problem, and it's not interest rates. It's not seasonal softness. This is an insurance rejection event, and it changes everything. Over the past year, insurers haven't been carefully adjusting risk. They've been pulling out entirely. Policies are being non-renewed with vague letters that cite portfolio realignment or risk reassessment, phrases that sound harmless but mean one thing: we don't want this boat on our books anymore. Premiums are doubling not because your boat suddenly became dangerous, but because the insurer wants to force you out without saying so. Insurance companies aren't just raising rates. They're exiting the chat. Once that happens, the rest of the market follows immediately. No insurance means no bank loan. No bank loan means about 90% of potential buyers disappear overnight. That's why you're seeing boats sit longer, relist lower, and quietly stagnate. What you're looking at isn't overpricing. It's a ghost market. The listings are real, and the owners are motivated. But the buyers can't move forward because financing dies the moment insurance fails. And here's the trap. Most owners don't find out they're on the wrong side of this market until renewal time. By then, it's too late to adjust strategy, too late to upgrade preemptively, and too late to protect resale value. Nobody warns you. Your broker doesn't call 6 months ahead and say, your whole year is aging out. The marina doesn't flag the risk until coverage lapses. And the insurer doesn't explain at all. They just don't renew. You're left staring at a boat that hasn't changed, but a market that has. Most owners respond the same way. They say their boat is well maintained. They have a clean survey, and they've never filed a claim. That logic used to work. It doesn't anymore. Because underwriting decisions are no longer being made by people. They're being made by automated models. Those models don't care how responsibly you've owned your boat or how carefully you've upgraded it. The model only sees 3 things: year, location, and category. If any one of those crosses an internal threshold, the decision is instant. There's no appeal and no explanation. What you're seeing now is the delayed impact of a massive claims surge. COVID-era buying. Inexperienced operators, rising repair costs, clustered storm losses, and reinsurance firms stepping away from the risk entirely. When the reinsurers pulled back, insurers didn't adapt. They retreated. And instead of telling owners what was coming, they let the market discover it one non-renewal at a time. That's the betrayal, because by the time you realize your boat is uninsurable, its value has already collapsed, even if the listing price hasn't caught up yet. In the next section, I'll show you why even a perfect survey won't protect you anymore, and the multi-billion-dollar pressure that forced insurers to draw a hard line through the fleet. Stay with me. This is where the illusion completely breaks. If you think a clean survey protects you, it doesn't. That belief is one of the most expensive myths still circulating in the boat market. It's the reason so many owners are blindsided at renewal. Condition used to matter more than anything else. Today, it's secondary. Sometimes it's irrelevant. Because underwriting decisions are no longer being made by people. They're being made by models. Behind every non-renewal notice is an internal scoring system that most owners never see. It doesn't care how much you've invested, how often you cruise, or how responsibly you operate. It runs silently in the background, updating thresholds as losses stack up. Once your boat crosses one of those thresholds, it doesn't get reviewed. It gets rejected. This is what underwriters quietly refer to as the blacklist. It's not a document you can request, and it's not written into your policy. It's a set of automated filters that decide which boats are no longer worth insuring, regardless of condition. Here's what's catching people off guard in 2025 and 2026. Hull age is the biggest trigger. For many carriers, boats built before the mid-2000s are now treated as inherently high risk. Not because they're unsafe, but because older vessels generate disproportionately higher claims when something does go wrong. Parts are harder to source. Repairs take longer and costs escalate fast. Original systems make it worse. Original fuel tanks, original wiring, and original rigging. To an underwriter's model, original doesn't mean authentic. It means unpredictable. Then there's geography. Tire zip codes are being downgraded or eliminated not because of what happened last season, but because of what could happen next. Storm clustering, wildfire proximity, flood maps, and marina density are all being baked into risk scores. If your location flips red, your options vanish overnight. And none of this requires a human decision. That's the part most owners don't understand. No one sat in a room and debated your boat. No committee reviewed your survey. No expert weighed your history. A line of code did. If you think I'm exaggerating, here's what's been happening quietly over the past year. Owners with clean surveys are receiving non-renewal notices with no path forward. Brokers scramble. Carriers decline to quote, and the boat doesn't change. The outcome does. Now let's talk about why this happened, because it didn't start with your boat. The fuse was lit years ago. During the COVID buying surge, demand exploded. First-time owners flooded the market, and boats that would have taken years to sell moved in weeks. Insurers bound policies at scale, assuming risk would normalize. It didn't. By 2022, claims spiked across the board. Storm losses stacked, novice operator incidents surged, and repair costs jumped as labor shortages and supply chain delays drove prices higher. What used to be manageable losses became sustained, compounding damage. At the same time, reinsurance costs exploded. Reinsurers, the companies that insured the insurers, looked at the numbers and pulled back. When reinsurance dries up, primary carriers don't absorb the risk. They retreat. And when they retreat, they don't do it loudly, they do it surgically, stopping coverage for certain years and capping exposure in specific regions. They let existing policies expire and quietly refuse to replace them. That's why this doesn't feel like a crisis yet. It's not a crash. It's an erosion. Every non-renewal shrinks the buyer pool. Every rejected quote reduces liquidity. Every ghost listing drags the market down a little further. And here's the hardest truth. None of this is temporary. Once a carrier exits a segment, it rarely comes back. Once a model tightens, it doesn't loosen unless losses reverse, and they haven't. This is the new underwriting reality. In the next section, I'm going to lay out the 3 survival paths still available, and which one applies to you based on where your boat sits right now. Because waiting for clarity is the fastest way to lose leverage, and in this market, leverage is everything. By now, the picture should be clear. This isn't a scare cycle, and it isn't going to quietly reverse. The underwriting model has already moved on. The only question left is how you respond to it. At this point, every boat owner is being sorted into one of 3 paths. Not by preference, by eligibility. There's no fourth option where nothing changes. The first path is liability-only coverage. This is the fastest way owners stay technically legal when full coverage disappears. It satisfies marina requirements, keeps the boat in the water, and lowers the immediate cash hit. But it comes at a cost most people don't calculate. A liability-only boat is functionally unfinanceable. Banks won't touch it, and serious buyers disappear. If you choose this path, you're accepting that resale value will drop, and that you're exposed if something catastrophic happens. It's a survival move, not a solution. The second path is preemptive underwriting, and this is where timing becomes everything. Owners who still have coverage can sometimes protect themselves by acting before renewal. That means commissioning the right survey, documenting upgrades, and locking in a policy while the carrier is still willing to bind. This isn't about convincing an insurer you're special. It's about staying inside their model long enough to preserve optionality. Once a policy lapses, leverage vanishes. The difference between being insured today and trying to get insured after non-renewal is massive. That's why the renewal date matters more than the boat's condition right now. Owners who understand this early can sometimes grandfather coverage through a sale. Owners who wait can't. The third path is strategic liquidation, and this is the hardest one for people to accept. Selling now isn't panic selling. It's recognizing where the curve is heading and choosing to exit while the boat is still insurable, financeable, and attractive to the widest pool of buyers. The last insured boats in a shrinking segment don't lose value. They command a premium. Waiting feels safer. It isn't. Because the moment your boat crosses into the uninsurable category, the market decides for you. Your leverage collapses overnight, and the only buyers left are cash buyers who know you're trapped. Those are the three paths. None of them are comfortable, but one of them applies to you whether you like it or not. This is where the story gets bigger. Insurance is only the first domino. The second domino is already falling. It has nothing to do with storms or claims. It's marina occupancy. Marinas are under pressure from their own insurers. As risk models tighten, marinas are being forced to reduce exposure. It means stricter enforcement, higher requirements, and in some cases, removing boats that don't meet updated standards, even if they've been there for years. Uninsured boats go first. Underinsured boats follow. Older vessels without full coverage become liabilities. What used to be a quiet arrangement, pay your slip, keep your boat, is becoming conditional. Coverage isn't just about protection anymore. It's about permission. Permission to stay. That's why some fully paid off boats are being told to leave. Not because they're unsafe, but because the risk profile no longer works on paper. This is the part almost no one is talking about yet. You can fix a survey. You can upgrade equipment. You can negotiate premiums. But once marinas start aligning with insurer pressure, the exit ramps narrow fast. This isn't about fear. It's about timing. If your renewal is within the next 90 days, you're in the danger zone. It's when decisions are made without you in the room. That's when options close. So check your policy. Look at the date. Look at the year on your hull. Look at your location, honestly. Tell me in the comments. Were you non-renewed, repriced, or still holding on? Because the next phase of this crisis isn't theoretical anymore. It's unfolding slip by slip. And in the next video, I'll break down why even insured boats are being pushed out of marinas, and what that means for the future of ownership itself. Insurance was the first domino. We've just seen what happens when it falls.